Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take. How your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, we're celebrating today. This is a good one. I got 3. Well, should I say 3 or should I say 5? National Sons Day. So I do have 3 sons, but I get to add 2 grandsons. Does that count as sons? I think so. Because no. Josh says no. Okay. I guess there's a special day for grandkids. So we'll just stick with 3 sons today. So I got 3 and I'm proud of all of them. So also it is National Pound Cake Day. Now, I like pound cake, but it's got to be a special way. So, Josh, we need to take that picture there and add some strawberries and a little whipped cream on top. Now, that's the way to eat pound cake. And yes, I do indulge every once in a while, but if you're watching us on any of our social channels, I did share today that for the first time, and I've been on this weight loss journey for a long time, 130 pounds is what I'm down. Yeah, I am excited about that one. rsrlinks.com/shot if you want to join us on this journey. And tomorrow, there's a couple of people that helped me get started on this. And one of them in his kitchen is where I had one of my first conversations about it, where I was, I heard of Ozempic. I heard of Wegovy. I watched a little TV. So I saw the singing and dancing. It didn't pay a whole lot of attention. But the gentleman that I've had one of the early conversations on it is going to be on the broadcast tomorrow. And not only are we going to talk about this weight loss journey, because he's at 130 pounds also down. He's also done this while fighting cancer. And what we're going to talk about tomorrow is not what you see on the scale, or more important than what you see on the scale is what you see in the mirror. What we're going to talk about tomorrow is what he shared with me about his blood work. Think about that. So he's got baseline numbers and he's got some other numbers, and I think he might share some of his personal journey tomorrow. But we will have a good conversation about peptides and peptide research in general, and the journey that he's been on, that I've been on. We've been on together. We chat quite a bit, and we'll talk about that on air tomorrow morning. So make sure you join us. If you're listening to us on the broadcast on ABC News and Talk, yes, it will be at 6 o'clock tomorrow evening. ABC News and Talk, AM 1490, FM 98.1, and their video feed. And I think, Josh, do we have it set up? I think rsrlinks.com/ABC rsrlinks.com/ABC, 6 to 7 p.m. If you don't get the AM or the FM signal, you can go online, rsrlinks.com/ABC, and you can listen to our conversation right there as well. So, not eating a whole lot of that pound cake today. What else is going on? Today is the birthday, Drew Houston. Anybody ever hear of Drew Houston? No, neither did I. Until I looked this morning. He is the co-founder of Dropbox. Anybody use Dropbox? Well, we use it quite a bit on Ron Siegel Radio. So that is, his birthday is today. And I cannot go past without stating, especially in a time like this, today is National Hug a GI Day. National Hug a GI. So as America is in a conflict right now, I have to say conflict, because a lot of folks want to say we're at war. Well, Josh, I need you to send me that Jeopardy soundbite so I can get it on the soundboard. So when was the last war that the United States was involved in? And if you're old like me, maybe you remember. Well, maybe I don't even remember. Let's see. So we've got the epic fury going right now. We had a Venezuela. We were in Iran last year. We had Gulf II, Gulf I. We had the Vietnam, Korea, World War II. When was the last war? Would you be surprised to know the last war that the United States was involved in? World War II. Why do I say World War II? Well, as you've heard in the news from the Democrats a lot lately, only Congress can declare war. Well, all those years that we were in Vietnam, that was a conflict. Congress did not declare war. We call it the Korean War, but that was not a war because Congress didn't declare that war. What's Congress doing? Obstructing, I guess. Gulf I, Gulf II, those were conflicts. They were not wars declared by Congress. And this conflict that we're in right now, not a war either. So this is a conflict. Regardless of what your opinion is, I don't care. You don't care about my opinion. I don't care about your opinion. But I am on radio, so I get to share mine. Is that I'm glad the president's doing what he's doing. You know, I don't understand how any Jewish person doesn't support getting rid of this regime who said death to Israel, death to America. Don't understand that. But that's a different story. What I am looking at is right now we've got a market rebound going on. The Dow Jones Industrial Average up 400 points. The NASDAQ is up 324. S&P 500 is up 65. And oil's down 7 cents a barrel. Not a whole lot of movement on the downside there when we're up at $74.48 a barrel. And we're looking at gold is up $57 an ounce, $51.46 on the gold market. We'll talk about what's doing this, what's causing these things, why it's happening, and why you should be paying attention. All that is going to be coming up in the broadcast. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we've got the mortgage minute. We've got our home prices dropping. Here's the real story. The dangerous credit myth, keeping buyers from the best rates, financial stability beyond the business, and what the economic headlines really mean for your mortgage strategy. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you put in your mortgage calculator to determine your principal and interest payment. If you do not have a mortgage calculator, shame on you, because we give it away a free every single business day morning as early as we can right here on Ron Siegel Radio, rsrlinks.com/calculators, rsrlinks.com/calculators. What did rates do yesterday? Most of them were up. Conventional 30-year fix, 6.022 up. Jumbo 30-year fix, 6.191. That was down. FHA 30-year fix, 5.872 up. VA 30-year fix, 5.698. That was up. USDA 30-year fix, 5.831. That was up. What do you think? What are we thinking about the market? Well, we tell you. rsrlinks.com/HBOD. rsrlinks.com/HBOD. That's where we put our market thoughts in our Ron Siegel Radio community. Again, it is free. So what are the markets doing today? The S&P 500 is up 61 points. The 10-year Treasury flat, 4.069. And the mortgage bonds are up 6 basis points. Remember, bond up, rates down. 6 basis points doesn't mean it's a whole heck of a lot. Not a lot of cause for it to be doing anything right there. So we are watching that one, and it's at par 05 right now. We're kind of flirting right now with the 100-day moving average as a level of resistance, a ceiling of resistance. So if we can get through that number, so we're at par 05. That number of the ceiling there is par 03. So we're just a little bit above it. If we can close above it, that'll be good for us. That'll be some good news to help us with lower rates. What's driving all of this? So oil prices slightly lower. The president announced yesterday that the U.S. would be there for the oil industry. The U.S. offered to provide insurance guarantees, and if that didn't work, even naval escorts to ensure safe passage through the Strait of Hormuz. That's where about 20% of the world's oil goes through that strait. Unclear whether oil companies will take the U.S. up on these offers, as the tankers are still the target, and there is a potential risk of loss of life. But the assurance appears to be calming the market. So far, ADP, they released their February jobs report this morning, showing that there were 63,000 jobs created, stronger than the 50,000 expected, but still a weak number, especially when looking at the breakdown of jobs. Almost all of the jobs came from education and health services, which added 58,000 jobs. Without education and health services, which is not economically sensitive, job growth in aggregate was almost zero. Construction added 19,000 jobs, which is likely due to AI data center buildouts. But professional business services lost 30,000 jobs. Adding to the weakness was a revision to the January, taking job growth from an already weak 22,000 to 11,000. This shows just how off the Bureau of Labor Statistics BS report was with their 130,000 job figure for the same month. Really, BLS, we're going to see on Friday how far off that was when they give us their first set of revisions. Turning to wages, workers staying at the same job saw their wages increase by 4.5% year over year, which was unchanged from the previous report. But job switchers, those changing jobs, saw their pay increase 6.3% from last year, which was a deceleration from 6.4% previously. The premium to change your job, or the difference in pay increase between job switchers and job stayers, fell 1.8%, the lowest on record since ADP started tracking. This is telling and shows that the labor market is weakening and there is less poaching from companies to obtain talent. Now, we did hear from some of the Fed speakers yesterday, and it's all political and it's mumbo jumbo. So they tell us on most of the time, well, we have to wait. It's data dependent. Data means you're looking backwards. Yet Kashkari, and I forgot who the other one was, made comments yesterday, and their comments were, well, we've got this conflict. Williams is the other one, New York Fed chair. So their comments were yesterday basically saying that we've got this conflict going in the Middle East, and we don't know exactly what it's going to do going forward. Well, they never know that because they're always looking at the history, and they think it might cause some inflation. Well, oil prices can cause inflation over the long run. But the question is, how much oil is being purchased at this current pricing? Or did the companies that use a lot of oil, well, what they end up doing is they hedge. They're buying futures. So they're watching out for these things. I shared on one of the calls I was on Thursday that one of my big concerns at that point, and I don't have inside information. I just pay for my own news. I don't watch. I monitor the stuff that's on TV, on the television or on cable. But I pay for my own news services to get the information that I believe is accurate and unbiased. And I was hearing already on Thursday that there was a high likelihood of the attack, of an imminent attack. They were actually even talking, what did they wait for? Well, they weren't going to do it during the State of the Union. And then Modi was in Israel, so they weren't going to do it while he was in Israel. And when was he gone? Friday. So kind of the way that information was coming out. But we're watching all these things. If oil stays high, 74.65 a barrel right now, that will have some impact on inflation. I mean, it won't matter in California because we like high prices. We vote for the people that give them to us. So we put them in power, and our gas prices are still just the highest in the country. It's all our choice. You know, we're going to have this election coming up in May, I think, is our primaries. I think it's May. But we'll be able to take a look and determine who do we want to be leading us, and do we want to continue on this path again? I just call it high prices. So our gas prices overnight went up 6 cents a gallon. Now on the national stage, they went up 9 cents a gallon. So we're at $4.74 a gallon, and we're going to go higher because of our politics. We voted in people that make it hard to do business in the state. The businesses follow the money. Money's leaving the state. So, you know, the oil companies, they're leaving. And, you know, Newsom says, oh, we don't care. You're going to do what we want anyway. Well, now what's going to happen in California, because California is getting rid of our refineries, well, what's going to end up happening, and we're getting our oil from the Middle East, even though the rest of the country doesn't really use Middle East oil as much, ours comes from the Middle East. So with this shutdown and higher prices there, we're going to get to pay higher prices in California. Aren't we lucky? You just look at this stuff. Now, I'm kind of looking at, Josh, what are you at, about 350, 360 a gallon? Give or take over there? More, 370? Okay, so usually I can look at the statewide average for Nevada, which is 382, and Josh usually seems like he's 30 or 40 cents a gallon cheaper than statewide numbers. But they're at 382 right now is what the statewide number is. And you got to remember, when you're talking about Nevada, when you're looking at statewide things, they've got a huge amount of very, very rural areas. So when you get out into the rural areas, well, if you need gas and you're halfway between Vegas and Reno, you're just going to pay whatever you need to pay because you didn't fill up early enough. Just the way it is. So, just look, watch gas prices. And I made this mistake, several months ago. I was driving out to Vegas and I said, something, I think what I'm going to do is I'm not going to fill up as early as I usually do or top off when I left Southern California. And I'll just wait till state line. Well, I get to the state line and the gas prices there were higher than they were in California. And then I get to the Costco right by the airport in Vegas, and their prices, I think if I remember correct, I don't know, I think they were $1 a gallon, $1.50 a gallon cheaper right there in Vegas, right outside of Vegas or right by the airport, based on what they were at the state line at those big gas stations out there, getting all the people just like me who said, I'm just going to wait till I get over the state line to go buy my gas. So don't make the same mistake I made, but watch where gas prices are, because that will affect the economy and it affects all of us. So we are watching all of these things for you. Tune into Ron Siegel Radio. I bring out all this information each and every business day morning, and you can watch us on our social channels as well, where we share this data. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, are home prices dropping? We'll give you the real story. And financial stability beyond the business. Financial stability beyond the business. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Are home prices dropping? Here's the real story. You've probably seen posts on social media talking about how home prices are falling, and when you see something like that, it's normal to wonder, is this the start of a crash? What does this mean for my house? Let's clear this up right away. This is not a crash, and your home is not suddenly losing a lot of value. The national story, prices are still going up. Here's what often gets left out of what you're seeing online. While some markets are experiencing slight declines, they're the minority. Most places are still seeing prices rise, or at least the very least hold steady. That's why at the national level, home prices are still rising, just at a slower pace. According to the National Association of Realtors, NAR, home prices continued to rise in the fourth quarter of 2025. National median prices rose 1.2% year over year to $414,900. That's not the rapid growth of a few years ago, but it's not a downturn either. And just to really drive this home, here's a look at the data from the National Association of Realtors at the regional level. So you can see that the negative narrative spun up online isn't the whole truth. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk, AM 1490, and FM 98.1 video feed, you are seeing a chart of home prices still up in most regions. Home prices are up, or at least holding steady in the Northeast, Midwest, and the South. The West has seen some small declines in certain markets, but small is the key word. There is no wave of falling prices across the country. Instead, there are just a few pockets adjusting after several years of what's typically considered unsustainable or exponential growth. Yes, some markets have come down, but look at the bigger picture. Okay, what about the places where prices have declined? According to Resi Club and Zillow, that's not a cause for major concern. When you zoom out and look at those same markets over the past 5 years, the story changes. We've got another graph for you. Recent home prices declines are offset by 5-year gains. In the areas with recent declines, home values are still significantly higher than they were just 5 years ago. That's a direct reflection of how much home values have gone up. Online chatter tends to shine a spotlight on the few areas that are down, but the bigger picture shows most homeowners are still in a very strong position. Of course, every market and every home is different, but broadly speaking, home values are holding steady, and this isn't a sign of widespread trouble in the market. Bottom line, despite what you may be seeing online, home prices are rising or holding steady in most parts of the country. If you're curious about what your home is worth today, let's take a look at the numbers together, because context and local expertise matter more than what you're seeing online. If you want to know what your home is worth in your zip code, we give that to you all the time. All you have to do is go to one of the free tools that we give you. RSRmoney.com gives that to you. RSR Market Report by zip code. RSRlinks.com/market report. RSRlinks.com/market report. That's a zip code level of what your home is worth. RSRlinks.com/market report. That tells you what's going on in your zip code. And you can go to RSRmoney.com. RSRmoney.com is going to tell you what your property is worth. That's just our tool. We'll give you a report once a month what your property is worth. RSRmoney.com. Thanks for listening. That is the Real-Time Real Estate segment brought to you by RSRmoney.com. RSRmoney.com. Borrow Smart segment today being brought to you by GetHomeSelect.com. GetHomeSelect.com. If your business disappeared tomorrow, would your personal finances survive? That's not a scare tactic. That's a question every business owner and executive needs to sit with for a moment. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. You're listening to Ron Siegel Radio. Here's something I see all the time. A business owner comes to me. They're successful. The company's doing well. They drive a nice car, live in a great neighborhood, maybe right here in Orange County. And on paper, they look wealthy. But when we start digging into the numbers, there's a problem. Sometimes a big one. 60 to 90% of their net worth is tied up in one place, the business. That's not wealth. That's concentration. And concentration is risk. Think about it this way. If you had a stock portfolio and 90% of it was in one single stock, your financial advisor would tell you that's a problem. The same logic applies here. So what does this mean for you? It means your personal financial picture needs to stand on its own, independent of the business. And that starts with a few key areas. First, liquidity. Most executives I talk to don't have nearly enough of it. And it's not because they're irresponsible. It's because all their capital is locked up in equity, in real estate, in the business itself. A good rule of thumb, 6 to 18 months of personal and business expenses sitting somewhere accessible, not in the walls of your building, not tied to a business line of credit, accessible. Liquidity isn't just protection, it's freedom. And freedom is what gives you options when opportunities show up or when something goes sideways. Second, retirement planning. For business owners, this rarely looks the same as it does for a salaried employee. You've got company cash flow to think about, tax strategy, exit plan, succession. There are tools available like defined benefit plans and cash balance plans that can work really well in the right situation. But here's the key. Your retirement plan needs to work with your business, not against it. Third, insurance. And I don't just mean having a policy, I mean having the right strategy. Insurance for a business owner touches income protection, business continuity, estate planning, and family security all at once. If you haven't had a real review done recently, not just a renewal, but an actual strategic review, you're likely leaving gaps you don't even know about. I always say shop your insurance regularly and look hard at your deductibles against your current financial situation. What made sense 5 years ago may not make sense again today. And remember, again, no financial advice from me, but I think talk to your financial planners about increasing your deductible and putting the difference in premiums into a Roth IRA if you qualify. Fourth, your advisory team. This one gets overlooked more than any other. The executives and business owners who tend to weather storms the best usually have one thing in common. They don't try to figure it out all alone. A coordinated team, someone handling tax strategy, that is not your CPA. They are tax reporters. Tax strategy is different. Someone focused on estate planning, someone managing risk. That coordination matters, especially as the complexity of your financial life grows. Now, I want to be clear about something. My lane is mortgage strategy and strategic debt management. But over the years, I've built a network of trusted professionals who handle exactly the areas I just described: tax, legal, insurance, retirement, estate planning. And when I sit down with a business owner or executive, the first thing we look at is the full picture, not just the mortgage, not just the rate, the whole household, because strategy beats rate always. If you're a business owner or executive and you want to take a hard look at where you stand, start easy. rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. It's a great first step toward getting your financial house in order on both sides of the balance sheet. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com. So, some of the tools we just discussed for you. They're pretty simple ones. Let's see. We'll give them away to you here this morning. You heard about key steps. That's a great one for you. rsrlinks.com/keysteps. Take a look at your financial health. rsrlinks.com/Sora. That's a 30-second credit app or loan app. rsrlinks.com/Sora. It does a soft pull of your credit score so we can get an idea of where that is. It also lets us take a look, and you take a look, at the debts that are showing up on your balance sheet, on your credit report. You can see if there's some that are incorrect. I just saw one the other day where almost everything was duplicated on there. Made them look poor on paper, but once they got that all corrected, it was easy. And if you want to know what your true credit score is, rsrlinks.com/FICO, rsrlinks.com/FICO. And our team that handles the estate planning, rsrlinks.com/estate is the estate team. So you can look at any of those anytime you want to. We put together we call it the household board of directors. Why do I call it a board of directors? Well, just like any company, they need a board of directors who all have their own individual specialties. And when you have your household board of directors, again, CPA or enrolled agent, tax strategist, not the same person, insurance, real estate, legal, mortgage, lending, debt management, all of those are part of your strategy team. So if you have them all, then you can make good strategic decisions. Now, speaking of the strategic decisions, now we told you over the last few days that we have seen interest rates increasing. And it's very common. We've been seeing this trend going on for a while where we get these windows where rates are really, really strong. And then I start getting people calling me saying, hey, Ron, is it a good time for me to refinance? And I say, yeah, but you got to hurry. Now, the other folks that are out there, some of them anyway, they're out there looking and they're saying, what I want to do is I want to know, what am I looking at from a standpoint of preparation? So just again, last night, I had somebody that's in our private client group. We had a conversation. They sent me their documentation, and we're ready as soon as rates turn around. So we did see that on a 30-year conforming loan, I don't know why I'm seeing different numbers than what I thought. Oh, that's why I've got the jumbo picture up and not the conforming picture. Okay, so let's look at 30-year conforming loan. Last Friday, we hit the low of 5.90. Again, that's according to OBMMI, and they've got a 35% market share. Does not include points paid, points received, APR costs, just the raw number you put in your mortgage calculator, 5.90. Well, that lasted until the end of day Friday. Monday, 5.975, and today we're at 6.022. Where are rates going? Hard to say, but if you know what your number is, I have a strike rate tool that I keep on my screen all the time, and it notifies me when somebody hits their magic number. How do you know what your magic number is? We have a conversation, and we put into our system, rsrlinks.com/what's your number? It's pretty simple. We find out, okay, I've got a mortgage right now, my mortgage payment, principal and interest, $3,500. If it got down to $3,200, $3,100, $3,000, I want to take action because I don't want to wait for it to jump back up again. And who knows what this Federal Reserve is going to do, because they are very, very political. They say they're not, but they are. So what we do is we get everything ready to do your entire refinance, your restructure, flipping your loan into something new. And we put that right into the system. As soon as that number hits, it's called a strike rate, we're ready to just lock you at the spur of a minute because you've already given us approval to do it. We don't even have to call you. All we do is we lock it and send you disclosures. You sign them, and we have you a new interest in a matter of just a couple weeks. But we've got to know your number first. rsrlinks.com/what's your number. We set up the entire file. It's ready to go. Just throw that out there for you. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, that dangerous credit myth, keeping buyers from the best rate, and what the economic headlines really mean for your mortgage strategy. Talk about that and more. You can reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. At 800-306-1990, 800-306-1990. The Borrow Smart segment today being brought to you by GetHomeSelect.com, GetHomeSelect.com. The headlines are everywhere. Iran, tariffs, the Supreme Court, the Fed, GDP numbers. It feels like you need a law degree and an economics PhD just to read the news these days, but here's what I want to talk to you about today. What does any of this actually mean for you, your home, and your financial future? I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Today, we're going to cut through the noise together. Let's start with something that doesn't get nearly enough attention. According to the Kiplinger letter, the Federal Reserve is looking at proposing new rules that would allow banks to do more mortgage lending. Right now, banks are required to hold a significant amount of money in reserve just to originate and hold mortgages. The proposed changes could reduce those requirements, particularly when borrowers have larger down payments. So what does this mean for you? It could mean more lenders in the market, which generally means more competition. And more competition can be a good thing for borrowers. But here's what I want you to keep in mind. More lenders doesn't automatically mean better decisions. More options means you need someone in your corner who's looking at the whole picture, not just the rate. And that brings me to something I've been saying for over 40 years in this business. Strategy beats rate always. Let me explain what I mean. When most people are thinking about mortgage, they fixate on the interest rate. What's the rate? Is it going up? Is it going down? Is now a good time to buy or refinance? Those aren't bad questions, but they're not the most important questions. The important question is this: what is your household blended interest rate? That means looking at everything from coming out of your budget, your mortgage, your car payments, your credit cards, your student loans, all of it together. Because a slightly higher mortgage rate might still be the smartest financial move if it helps you reorganize your total debt picture. Now, Kiplinger is also reporting that the economy is expected to grow by 2.8% this year. That's actually a step up from last year's 2.2%. They point to stronger tax refunds, continued business investment, and a possible manufacturing recovery is contributing factors. That's encouraging news. But here's the flip side. There's still a lot of uncertainty. Tariffs are in flux. Trade deals are being negotiated. Iran is Iran, and while gasoline prices are still relatively low, they are creeping back up because of the conflict. All of that has a way of affecting everyday household budgets, whether people realize it or not. I had a client not long ago who came to me frustrated. She felt like she was doing everything right. Good job, decent savings, but every month she felt like she was running in place. We sat down together and looked at her full financial picture. Her mortgage rate looked fine on the paper. But when we looked at her total monthly outflow across all her debts, the picture was very different. We made some adjustments, not magic, just strategy. And within a few months, she had a lot more breathing room. That's what strategic debt management looks like in real life. Now, let me circle back to the Fed news for a moment because it ties into something bigger. The proposed changes would also shift how mortgage-backed securities work. Specifically, mortgages might stay on bank balance sheets rather than being sold off to Fannie Mae and Freddie Mac. What does that mean practically? It means the mortgage market could look meaningfully different in the next couple of years. Qualification standards, products available, who's lending that what? It's all in motion. This is exactly why I encourage everyone to look at the financial house now, not when rates drop, not when the market settles, now. Because the families who are prepared are the ones who can move quickly when the right opportunity shows up. It doesn't matter whether you're thinking about buying, refinancing, or just trying to figure out if what you have is actually working for you. The question is the same. Is your current financial structure built around safety, liquidity, and return? Those are the three lenses I look through with every single client. Safety means your home and your family are protected. Liquidity means you have access to cash when you need it, not just equity sitting in a wall. And return means your money is actually working, not just sitting there. If you want to take a closer look at where you stand, I want to invite you to visit rsrlinks.com/keysteps, rsrlinks.com/keysteps. We offer a program there that helps you take a clear, honest look at your financial picture and figure out what steps make the most sense for your situation. No pressure, no sales pitch, just strategy. The economy is always going to have headlines, some good, some confusing, some that feel a little scary. But the families who come out ahead aren't the ones who got the best rate at the right moment. They're the ones who had a plan. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com. I think we have time for Your Credit Matters segment. Josh says yes, so we're off and running. Your Credit Matters brought to you by rsrlinks.com/debt-free. You're getting ready to buy a home. You've been saving, you've been planning, and now you're finally ready to start shopping for a mortgage. But then someone tells you, don't let too many lenders pull your credit. It'll destroy your score. So you freeze. You pick one lender, hope for the best, and never find out if you've got the best deal. Here's the thing. That advice, it's only half right. And the half that's wrong could cost you thousands. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. And today we're talking about one of the most misunderstood topics in the credit world, credit inquiries. What they really are, how they actually affect your score, and what you should and shouldn't worry about. Let's start with the basics. There are two kinds of credit inquiries, hard inquiries and soft inquiries. A hard inquiry happens when a lender pulls your credit because you've applied for something, a mortgage, a car loan, a credit card. A soft inquiry is different. That's when you check your own credit or when a lender does a pre-qualification check. Soft inquiries don't affect your score at all. Zero, nada, none. So right away, half the fear goes away. Now, for hard inquiries, yes, they can affect your score, but here's what most people don't know. A single hard inquiry typically has a very small and temporary impact. For someone with a well-established credit profile, the effect can be almost unnoticeable. Where it starts to matter is when you have several inquiries showing up in a short window, especially if you have a thin credit file. If you've got high balances or if you've had some late payments recently. That combination is where lenders start paying closer attention. And here's something really important for anyone shopping for a mortgage. FICO scoring models are actually built to handle rate shopping. They understand that a smart consumer is going to talk to more than one lender. So if you apply with multiple mortgage lenders within a focused period of time, many of those modern scoring models will count all of those as just one inquiry. One, not five, not 10, one. Now, the window depends on the model being used. Many of the modern FICO models group inquiries made within about 30 days. Some older mortgage models use a tighter window, closer to 14 days. And Vantage score models typically use about 14 days as well. My recommendation, when you're shopping for a mortgage, try to complete that shopping within a 2-week window. That's the safest approach across all model lenders might be using. Now, remember, if you didn't call us first, which you should have, we have our second look advantage, rsrlinks.com/2ndlook. rsrlinks.com/2ndlook. That's rsrlinks.com/second look. If someone applies with 5 mortgage lenders over a 2-week period, the scoring model often treats that as one inquiry for scoring purposes. But, and this is important, if that same person applies for 5 different credit cards over 2 weeks, those are 5 separate inquiries. Big difference. So the rule of thumb is this. Mortgage shopping, auto loans, student loans, those typically get bundled. Credit cards and personal loans, those do not. Now, here's where I want to connect this to something practical. A lot of people come to me after they've already been working with another lender. Maybe they got a pre-approval somewhere. Maybe they've been quoted a rate, and something just doesn't feel right. That's exactly what our Second Look Advantage program is designed for. You bring us what you've got, and we review it. Not to be critical, but to make sure what you were offered is actually suitable for your situation. Not just whether you qualify, whether it's truly the right fit for you and your family. You can learn more at rsrlinks.com/2ndlook. rsrlinks.com/2ndlook. That's like second look, but the numeral 2ND look. If you haven't started the process yet, if you want to go into this right away from day one, look into our certified buyer program. This is how you show up to the table as a prepared, serious buyer, not just pre-qualified, actually certified. Sellers notice that. Realtors notice that. It can make a real difference in a competitive market. That's rsrlinks.com/certified buyer. rsrlinks.com/certified buyer. Now, back to the credit question. How long does a hard inquiry actually stay on your report? Up to 2 years. But here's what's important. the actual impact on your score fades much faster than that. The visible record stays longer than the scoring weight does. And should you avoid applying for credit entirely while you're preparing to buy? Not necessarily. There are times when strategically adding to your credit profile actually helps you. The key is avoiding unnecessary applications, things you don't need at a time that doesn't make sense for what you're trying to accomplish. I work with clients all the time who come in thinking their credit situation is a disaster when really the inquiries aren't even the main issue. 9 times out of 10, the bigger factor are payment history, credit utilization, meaning how much of your available credit you're actually using, and the overall structure of your credit file. Inquiries matter, but usually not as much as people fear. The real question, do you actually know where your credit stands right now? Not a guess, not a ballpark, your real score, the one lenders actually see. We can get that at rsrlinks.com/FICO, rsrlinks.com/FICO. So, bottom line, I want you to get help. Go to rsrlinks.com/Sora. That's rsrlinks.com/Sora. You do a soft pull right there. It won't affect your credit score. It gives you a real look at where you stand today. If you want to take a bigger picture look at your overall financial house, rsrlinks.com/keysteps, rsrlinks.com/keysteps. That's a great starting point for anyone who wants a strategy, not a rate. Because here's what I know after more than 40 years in this business. A little knowledge goes a long way. Don't let fear of something you don't fully understand keep you from making the smartest financial decision for your family. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Your Credit Matters segment brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.